All right. We are live at the Beat the Odds at Business and Wealth podcast. And today, Josh Spurrell is in Vancouver. Say hi, Josh.
Hey Trevor, we
Hey,
got a
man.
great episode today. We are going to drill into how the heck did the CPP plan get a 1% rate of return? A
Whew.
1% rate of return. Who's in charge of this thing? What does this mean? How is this affecting the wealth of Canadians? It's like we're going to do it from Vancouver today.
Oh my gosh, I can't believe it, man. When I saw that come across my Twitter feed, I was like, oh my gosh, Josh has to see this. This is laughable. 1% over the last quarter. So let's dive into it and see how we got here and any of the things that we could have done differently to get better than 1%.
Oh, we could do so many things differently. But okay, let's go. And we want to show people this is not just a made up number. You might have seen it circulating online, but this is the actual financial report from CPP. And there they are, bragging a nice, bold 1%. That's Q1 fiscal 2026 net return, 1%. Okay. Let's put that into perspective, 1%. So we're talking about a fiscal year end that starts April 1st, okay? So you're talking about a S&P 500 at that time, that's 5,600, okay, March 31st. Fast forward until June 30th here, you have 6,200, okay? So you're talking about a 600 point change, roughly 11%. So the S&P 500 in that time, I don't mean for the year, I mean in that same quarter is up 11%. But the geniuses over at CPP Investments managed to get 1%. They managed to get a 1% rate of return. Okay. And we dig a little we dig a little deeper, Trevor. Like we have to
Okay.
go deeper. Like who are these people? Like what are they doing? Okay.
Well, what's so
So
funny about this, Josh, is, so many people are up in arms about CPP. Don't take away my CPP. Though people talking about Alberta independence or whatnot, or Alberta clawing back the having their own APP, and people are thinking, oh no, don't take my CPP. I'm like, the people managing your CPP are retarded. Sorry, I mean it's an R word. I might get banned from YouTube, but still, it's bad, so bad.
yeah, well, you might see they might be not that I don't know if they're that good at their job, but they might be kind of smart in what they're doing. If I show you one of these slides here, and the people talking about from Alberta independence, you're gonna want to see this figure. You're gonna want to see the figure at the end here. Okay, so pushing back through. So what happened here? It's like this is their consolidated statement of income. Okay, where did they lose the money? They didn't lose the money on interest income or dividend income or public investments. They actually made $13 billion on public investments. They made $2 billion in interest. They made $7 billion in dividend income. They lost it on $3 billion on private investments, and they lost $9 billion on other private investments through holding subsidiaries. Okay, so now surely we know that they didn't keep up with the index this time around in Q1. It's not even
Mm.
close. They got lapped 10x. Okay, in terms of it. So who are these people? What do these people? Are they not that smart? Well, maybe they are kind of smart, actually. So here's John Graham, and here's his compensation. This is John Graham's compensation according to the 2025 annual report for CPP. So he gets a base salary of $695,000, but he needs some performance pay, Trevor. You can't just give this guy $695,000 a year. He's got to eat. And so his performance pay is $1.8 million. That's what he got in 2025. Okay.
Wow.
And yeah, it's like that's what they get, right? Is that's the CEO. But what about Christina Fanjoy? She's the senior managing director and chief financial officer. She gets a base pay of $461,000. Okay. And now, what happens for her? What does she need on top of? She needs some performance pay too, of $587,000. Okay. And then you get Maximilian, the senior managing director, global head of real assets and head of Europe. We got to pay this guy in Great British pounds, 424,000 Great British pounds, not Canadian dollars. We're talking pounds. Okay.
Oh.
And then performance pay of $1.1 million Great British pounds. Okay. These are not made up numbers. You can just go look at the 2025 reports. Okay. So maybe they're kind of smart. Maybe they're not so good for you.
Hang on just a cotton picking second. Okay, so these guys are supposed to be managing the funds for the CPP for Canadians. You put your money in and these guys invest it, get a gain, and supposed to be building up this fund. And they're doing a horrible job at it, but they get bonus pay. Like they're making millions of dollars a year.
Millions per year to get lapped 10 times by the S&P 500.
If that doesn't piss somebody off, I don't know what will. I mean, that's ridiculous. I could do a better job, and I'm not that. You got to be connected, I guess. I mean, it's not about being smart, I suppose. It's about being connected.
Well, the next ones are going to show us like almost anyone could do a better job unless you're not trying to. So they actually publish their value added stats. So what are their net returns and their value added? And they will openly admit that they have underperformed the index by 0.8%, almost a full percentage point over the last 5 years. Wait to see how that value added is going to turn out this time around, now that they got lapped 10x in Q1. So it'll be an interesting value added computation for the 2026 fiscal year when you get to the end of it. But even before this disastrous quarter performance, in the last 5 years, they were underperforming the indexes by 0.8%. So almost a full percentage point. Okay? And of course,
for 5 years?
For 5 years.
Holy crap. 5 years
underperforming. That's what you get for $1 million. Maybe they should pay him some more, Trevor. Maybe he needs a little more performance pay. Maybe then he would
go to the end. Look at his total compensation. $6,392,000 with his pension and all the other compensation.
Obviously needs a pension. He only got 1.8.
Right.
1.8 million of a bonus. Got to give the guy a pension, right? So
man, his bonus alone is a pension. Like,
yeah.
God.
Yeah.
All right.
And
okay.
So,
continue with this shit show.
Let's back up. And that might appear like that's the worst problem with CPP. And this is where I tell people it's they're all scared about, not paying into CPP or, what happens if the Alberta government gets control of the CPP. Well, basically what this is telling you that a monkey picking at random would actually do a better job because of the lower fees. That's actually what it's taking. Is if you just look at an index, you remember the old, stock list that was in the newspaper, and if you just threw 30 darts at that board, you would actually get the average rate of return 99.9% of the time. That's just a mathematical probability if you picked enough. So but they're underperforming the index, and they've been underperforming the index for quite some time now. Okay, but that is not even the worst thing, because sometimes people see this and they say it's okay, we're still getting 8-9%, right? I'm still getting 8-9%. So whatever. They're not that bad, right? Okay, strap in, because here comes the bad news. Here comes the bad news. Okay, this was the good news, that this guy's getting 1.8 million and they're underperforming the market by 0.8%. And you think you're getting 8%. Not going to get 8%. It's this is not how they're destroying wealth. How they're really destroying wealth is just take a step back for a second on what you actually get on CPP. Okay, what you actually pay in to CPP. Someone earning $71,300 in Canada is going to pay in $4,034. Okay, and their employer is going to chip in another $4,034. If you're self-employed, you're going to pay both halves of that. You're going to pay $8,000 per year. Okay, and now, because it's so good, because CPP has been so good, they've introduced CPP 2. Okay, they need another they need another $792 from the employee and the employer to contribute to this scheme. We're going to call it
You know what
scheme.
that tells me? That tells me they're broke as a joke, and they have to find other ways to extract liquidity so they can keep up with their schemes. Like,
Yeah,
it's
yeah,
ridiculous. Like, when I heard they came out with this CPP2 thing, I was like, wow, that's absolutely incredible.
yeah.
Not only are we paying way too much into CPP, we're paying an additional CPP if we went a little bit, made a little bit too much money. That's crazy.
Yeah, and just a quick search, just think about this. What you're putting in for a second. You're putting in, uh, you're putting in $8,000 per year, and what's the max CPP payout in 2025? It's $1,400 a month.
What?
$1,400 a month. Okay, now the people who are getting the $1,400 a month now didn't put in 8,000, but they put in too much. Okay, they put in too much. Now, where does this traject? Where this trajects is the actual effective rate of return, the nominal rate of return, 4.3%. That's probably what you're going to get out of this system. Okay, we've known this for quite some time. We're going to get 4.3% out of the system. Okay, but now here's the point where people have to understand: it's like, why does it say they're getting 8 or 9%? So they're getting 8 or 9% when the money gets in. And I know, John Graham's getting a bunch of it, but this 8 or 9%, like that's after Johnny Boy gets his multi-million dollar cut. This is net returns here. So why does it only work out that they're actually getting a nominal rate of return by 4%? And I don't really go that much about with the real rate of return, because the real rate of return is basically calculated using a fake inflation number. So let's just go with the nominal rate of return for now. Okay, Trevor,
Yeah.
any ideas? Any ideas? You want to guess, like, why, if they get 8%, 9%, why is the retiree only going to get 4%?
Josh, I'm just too flabbergasted to even take a guess as to why the annualized earnings are only 4%. I'm sure it's going to really irritate me, but let's find out.
Okay, here we go. Here we go. And this is the Office of the Financial Superintendent. This is the latest actuarial report. It's a big, long report. Okay. We're due for a new one at the end of the year. Probably 150 pages long. But all the values of CPP and all the diversity and equity and inclusion and all their goals and objectives and legalese, and go all the way down, the 150 pages until you get to right at the end. Footnote 14. Footnote 14 is the reason they should just put this thing at the top. And it says, as at December 31st, 2021, under the closed group approach. So let me tell you how they try to sell this to people. It's like they say it's the open group approach, because obviously we're going to get new people entering CPP who are going to pay into the program. So under the open approach, open's a good word, right? We should be able to use that. Open's a good word. We could just openly use the new participants' CPP contributions to pay the old participants, okay? But if you calculate it on a closed group approach, so what that means is if you calculated the net present value of the obligations that you have today and measured them against the assets you have today, the actuarial obligations of the base plan, this isn't according to me, this isn't according to the Fraser Institute, this is the Office of the Financial Superintendent, okay, are equal to 1,686 billion. Okay, so 1,686 billion, 1.6 trillion. Okay, the actuarial obligations of the base plan are 1.6 trillion. The assets are 543 billion, and the asset shortfall is 1142 billion. 1.1 trillion with a T. Okay. So even though Mr. Graham, he's gonna get you his 8%, 9% after he gets his 3 million bucks. You're not gonna get 9%. You're going to get 4.3% because there's $1.1 trillion in unfunded liabilities in the Canada Pension Plan. Don't take my word for it. Just go read the reports, people. That's right there. This is how the wealth is being destroyed. This is not a savings plan. It is a Ponzi. Okay? A tax at best, a Ponzi at worst. Okay? And if you want to get out of it, like, there is a better way, people. Like, getting 8%, it's like the money supply goes up by 8% every year. Like, the chimpanzee throwing darts at the dartboard could get 8%. Okay, you should be getting 10% or more. Okay, but instead, Canadians are getting 4%. Now imagine someone who sells their house today, and they get a lump sum of money. They get $1 million, and they grow up by 4% a year. And then they come back in 10 years, and they try to buy that same house back. They wouldn't have enough money. This is not even preserving purchasing power. There's no way. Canadians know this. Okay, it doesn't matter what the CPI number tells us. We know we know the things that we're buying are going up by more than that. Okay, and where is the money there? It's like under the closed group approach. And this is going back to, what if Alberta wanted to cash out of this thing? It's like, the money isn't there, people. They don't have enough money to meet their obligations. So they're not going to give you the money to meet the present value of those current obligations, because they don't have it. They're $1.1 trillion short of having it. And so they'll continue to get a poor rate of return, and they will continue to be underfunded. Okay, and so you won't even get that poor rate of return because you're not paying into your retirement. You're paying for people who are already retired and didn't save enough, and the money's not there.
So I think it's safe to say that if you're hoping for that $1,443 a month, and you're in your, let's say my age, in your 50s going into your 60s, and that $1,443 is not really going to be there for you. So you got to get into doing something different. Obviously, CPP is a scam, Ponzi. It's set up just like a Ponzi. The new people coming in are paying for the people getting out, and eventually that thing crumbles. They always crumble, and that's why they made them illegal. Because people who get into the Ponzi scheme at the very beginning, they're the ones who benefit from it the most, and the people who are in it the last, they lose their investment, and they're stuck with nothing. So basically, most of the people who are depending on this and hoping for this and crying for their CPP and their retirement fund, it's not going to be there, folks. I hope you know that. I hope by now you realize that. So it doesn't matter if it's in the Canadian pension plan or the Alberta pension plan. They're both stupid. I think you should be able to keep the money put in your own pocket and use either Wealthsimple or Questrade or some other trading platform to take your life in your own hands and be responsible for your own money. That's just my thought. What are you thinking, Josh?
I mean, it's a good place to start. Most people don't know. And so if you're looking at this, it's like, how do you actually beat the rate of return of global markets? That's what we teach people at the bootcamp, because it's not about beating CPP. You should actually be able to beat the rate of return of the market. You should actually beat the benchmarks, not just meet the benchmarks. And that's what we'll be teaching people again in the bootcamp coming up in November. So if you don't know how to use those platforms, if you don't know the alternatives, if you don't know how to get a real rate of return, this is for you. It's a good starting point for people just starting out, and there's some advanced tactics for people looking to take it to the next level too. So, hope to see you there at the boot camp, because the last thing I want to see people doing is relying on this 4.3%. Because even if you get it, Trevor, you're going to get it with fake printed money. Okay, you're going to get it with higher and higher inflation. It's like they can give it to you, but they can just print more fake paper dollars to give it to you. Okay. And so the 4.3%, well, the purchasing power of that will be less and less. Okay. And so that means the incentive to buy the actual quality of assets and learn how to do it goes up and up.
Okay, well, that's that's very sobering and eye-opening. Folks, get your ticket to the boot camp today. Go to spurrell.ca, spurrell.ca, and get your ticket to the boot camp now. I think we're getting very, very close to being sold out of tickets. We're over halfway sold. I haven't looked at the numbers recently, but I'm pretty sure we're darn near there. So I would say get your tickets today. Any further things you want to say, Josh?
Nope. I mean, if this doesn't, open your eyes, people, like, go and read these resources. That's why I show them, because these aren't my numbers. These are numbers from the official sources. You can look them up. They're there. And once you see it, you realize there's a problem. That's the first step. Okay. That's the first step. Once you realize there's a problem, then you got to go looking for the solution, because there is a solution. Okay.
Yeah. All right, everybody. With that in mind, elbows up. See you next time.